Good morning, everyone. It's Matt Donahue with Mission Financial Planners, and this is your weekly market recap. Let's go ahead and jump into it. New home sales rose to 652,000, topping expectations. However, at the same time, consumer confidence slipped. On the inflation front, both headline and core PCE ticked up. What do those numbers tell us? They really remind us that while housing continues to show resilience, consumer sentiment is still on edge and inflation remains sticky. Looking ahead to this week, all eyes are on manufacturing and services PMIs plus the August non-farm payrolls. This will give us the clearest read yet on whether the U.S. economy is still running hot or beginning to cool. Consumers are often called the engine of the U.S. economy, but recently that engine has been sputtering. Over the past two decades, consumption contributed an average of 1.7% to growth. In the first half of 2025, that number dropped to just 0.7%. So what's been picking up the slack? Technology and artificial intelligence. Business investment in software, R&D, and information processing added 1.1% to growth, which is nearly triple its long-term average. Nvidia closed out earnings season on a high note, forecasting $3 to $4 trillion in AI infrastructure spending by the end of the decade. That's a staggering number. The opportunity is massive, but it also means the economy is leaning heavily on a singular secular trend. The big takeaway here, diversification is going to matter more than ever. Investors should capture long-term growth from tech and AI while protecting portfolios against weaknesses in the more traditional cyclical sectors. Changing gears to philosophy, Epictetus once said, "The philosopher's lecture hall is a hospital. You shouldn't walk out feeling pleasure but pain, for you aren't well when you enter it." Think about physical therapy. Healing hurts. The therapist presses on the weak spots to rebuild strength. Stoic philosophy works the same way. The discomfort isn't punishment, it's training. It's how we develop endurance, resilience, and the ability to persevere through life's difficulties. We're going to continue to talk a little bit about education this week and kick off September with more of a focus on healthcare planning. We get a lot of questions about 529 education plans. Those are a tax-advantaged way to invest in a child or maybe a grandchild's education. Contributions will grow tax-deferred, and withdrawals are tax-free if used for eligible education expenses. And that's everything from tuition and books to technology and even some room and board. You can open a plan for your kids, your grandkids, relatives, maybe even yourself. If one child doesn't use it, you can change the beneficiary or roll the funds into another 529. In 2025, a married couple could contribute as much as $190,000 in 1 year. But you always want to check on the rules before funding. More than 30 states offer tax deductions for contributions, but the key is really to start early and give your investment in that college fund time to grow. Now, college isn't the only major cost to plan for. Healthcare is also a huge cost, and you have to be thinking about that as part of your overall retirement plan. A 65-year-old couple may need as much as $350,000 for medical expenses. And that, folks, does not include long-term care. So those numbers can sound intimidating, but with planning, just like education funding, you can save upfront and spread the costs out over time. So here's the bottom line. The economy is shifting, tech is driving growth, but diversification remains key. Stoic wisdom reminds us that discomfort builds resilience, and smart planning, from 529s to healthcare, helps secure your financial future. Until next time, stay focused, stay disciplined, and keep moving forward.